Another opportunity that came out of this crisis was with high-yield bonds in the U.S. I was buying those bonds for my clients and getting over a 20% return and taking a lot less risk than the equity market at the time.
I'm Dan Richards. You may know me from my regular column in the Globe and Mail Report on Business. I'm talking today with Laurie Livingstone, Portfolio Manager with the downtown Toronto office of Scotia McLeod. Laurie, we're going to talk today about the clients you serve, how you serve them. Before we do that, some quick background on your time in the industry.
I've been in the industry almost 25 years now, and up until 6 years ago, I worked primarily on the institutional side of the industry.
And tell me a little bit more about that experience on the institutional side.
I worked for a large insurance company where I was responsible for managing their Canadian equities, as well as involved in their asset mix committee, and I also worked for a large pension fund manager where I was also responsible for the Canadian equities as well as the U.S. equity.
And were you managing money during the tech boom in the late 90s?
Yes, before, all through it, and afterwards.
And what were some of the things that you learned from that experience, Laurie?
Well, certainly how irrational markets can get, the herd mentality, and also really, once again, reinforcing the need for diversification to reduce risk. And as we all know, so many people ended up with way too much technology in their portfolios and really suffered, and Nortel being the worst example.
You mean owning 80% of Nortel in your portfolio wasn't a good idea?
No, not so much.
And Laurie, let's shift gears here and talk a little bit about where you are today. What was it that 6 years ago made you decide to move to working with individual investors?
Well, it was really that I knew I had a lot of experience and expertise that I've gained through the institutional side of the business that I could bring to the individual client. And as well, I just frankly find it much more rewarding to help my clients achieve their goals.
So Laurie, if somebody said to you, how are you different in your approach to working with individual investors, how would you answer that question?
I think 4 ways, really. First, I'm licensed as a portfolio manager. Second, I'm entirely fee-based. Third, I take a real holistic approach to my work with my clients. And fourth, I'm very much focused on risk and risk-adjusted returns.
So let's go through each of those, starting with being a portfolio manager. How do your clients benefit from that?
Well, most advisors are only licensed to consult for their clients and have to consult with them before they make a trade, whereas I'm licensed to actually manage on behalf of my clients. In order to be licensed as a portfolio manager, you need a higher level of education and experience.
And the advantages to your clients of being able to do that?
Well, they know when they're hiring me, they're hiring the expertise to manage on their behalf, and they don't have to worry about the day-to-day investing.
So let's move to the second point of difference that you talked about, which is operating on a fee basis.
Well, like on the institutional side, where clients pay fees based on assets under administration, my clients pay me a fee based on the market value of their portfolio. So when their portfolios go up, we both benefit, and when their portfolios go down, we both feel the pain. So our interests are completely aligned.
Point number 3 is your holistic approach. Tell me about that.
I work with a team. I have a financial planner, I have an estate lawyer, and I also have a CA who works specifically on the tax side of the issues for my clients.
And Laurie, the last point of difference that you talked about, your focus on risk-adjusted returns, does that come out of your background managing money for institutions?
Absolutely. On the institutional side, risk is a huge focus. We were very cognizant of how much risk we were taking to achieve the returns. I find on the private client side that that's not the case. People don't talk enough about risk. They talk too much about just the returns.
And what would be an example of a decision in the last couple of years that you made based on that risk-focused approach?
I think a good example of that is through this crisis when the banks issued preferred shares that reset in 5 years, and they were paying between 7 and 8%. So the ability to lock that in for my clients was a tremendous opportunity.
So with your focus on risk, you bought rate reset prefers. Something else you did with that focus in mind?
Yeah, another opportunity that came out of this crisis was with high-yield bonds in the U.S. I was buying those bonds for my clients and getting over a 20% return and taking a lot less risk than the equity market at the time.
Laurie, I'd like to wrap up by talking just a little bit about your outlook for the Canadian market. You've had a lot of experience managing in this space. What kind of value do you see today in the Canadian stock market?
Well, the market's had a good run for the last couple of years now, and it's getting expensive. So I actually see more value in the U.S. market right now.
And when you're investing in the U.S. or internationally, how do you go about doing that?
I will either use an ETF that will provide the diversification, or I will on occasion use a portfolio manager that I know really well and understand his investment style and have a strong degree in confidence in his abilities.
Laurie, thank you very much.
Welcome.